Are you considering buying a home and you're wondering what are mortgage lenders? What do they do? How do you interview them? How do you find the right one? Well, today we've got an expert to help us through this process. Welcome, Mike Aning with Mosaic Mortgage. He's joined me before, and today he's going to help us unfold some of these key questions that I find a lot of first-time homebuyers get stuck on and don't take time to educate themselves on. So we're going to get right to it.
Awesome. I'm happy to be here. Thanks for having me again.
Yeah, absolutely. So, Mike, can you explain at a high level what a mortgage lender or a loan officer does?
Yes. So the loan officer is the conductor of your orchestra, right? Because as we deal with loans today, they are complicated. There's lots of moving pieces and there's lots of players involved. So the loan officer should be or is the interface between the client and the bank, the loan operations, the loan operation. So behind the loan officer, you normally has a coordinator, maybe a processor. There's going to be an underwriter. There's going to be a doctorar. There's going to be, several people that are in queue behind there. So loan officer is going to be the one that collects your documents, outlines your options, and just basically tries to give you a focal point to make sure that they are setting up the loan for everybody else to do their jobs and hopefully, play the symphony that you need.
Got it. Yeah. So you've got the realtor who's helping with all the home purchase and inspectors and seller. And then you've got the loan officer who's helping with all the loan pieces. Together, hopefully your realtor and lender are working also together to orchestrate the two different parts, all to close of escrow, right?
Yeah, of course. Right. Yeah. And lots of players, home inspectors, property appraisers, title companies. So, the loan officer kind of is supposed to integrate and really be a service person to everybody else involved in the transaction too.
Perfect. Yes. All right. So one thing I see is a lot of buyers get overwhelmed, or borrowers in your terms, get overwhelmed by how many options, right? They could go to some big banks that they see driving around town. There might be small credit unions. There's mortgage brokers. What's the difference? What are the different types? Can you help us understand that?
Yeah. So across the country there's lots of different loan options available, right? And everybody's going to offer some different type of the same vehicle. So a car is a car, but a Toyota and a Porsche are just different, right? So as we deal across the country, there are three main different types of lenders. So you have a mortgage broker, which is the typical, what most people are familiar with. You have your retail banks, and retail is like your normal, your bank on the corner, maybe where you have your checking, your savings. We call that retail because you can go into the branch and talk to a loan officer there. And the final one is a mortgage banker or a direct lender. These direct lenders have they work with the lenders, but they have different capabilities versus the brokers and retail. So I can explain a little bit about each one of those.
People understand walking into a bank and working with them.
Yep.
I would say one maybe con that I've heard, or maybe you've run into with a retail bank, is that once you get a loan pre-approval with them, you're kind of stuck with them, right?
Right. Yeah. So it's important to know for all home buyers or borrowers out there that loan pre-approvals are no longer portable, right? It used to be that you could get pre-approved, and through the process, you could change lenders, you could, take your appraisal from one place to the next, and those rules have changed. So loan pre-approvals are no longer portable. So the one of the drawbacks with the retail banks is if you do your due diligence today and you find the one place that offers the lowest rate, a month from now or 2 months from now, when your offer gets accepted on your home, a better rate could be right across the street, but you aren't able to take advantage of it, right? Because those banks, it's like McDonald's, all they have is the Big Mac. You can't get a Whopper. You can't get another type of burger there. You just get the Big Mac. So that's what the retail, they have some good products, but a limited menu. And sometimes if it's not the best that day, it can be an impairment for some buyers.
Yeah. And you have to start all over again if you really want to move, right?
Correct. Right. Yeah. And if you're already in contract, right, if you have an offer accepted on a home, if you're talking about raising stress levels and anxiety, that's what would happen.
How you do it. Yeah. You crunch the timeline.
Right. Exactly.
Okay. So I believe Mosaic Mortgage is a direct lender, correct? Can you explain the advantage?
Yeah, I will say that we are a hybrid. So, so retail is just, going into your bank on the corner, right? So, we are a direct lender. So the difference for us is that we do everything from, as a direct lender, and this would be the same for most direct lenders, some of the other banks that you would hear, in the marketplace are direct lenders as well. But we do everything from a meeting with the customer, underwriting, approving the loan, drawing the loan docs, and closing. So it gives us a lot of control. We actually, basically put the loan on our conveyor belt from application to funding, right? Once the loan is funded, because we are a mortgage bank, we'll transfer that loan off to one of our other investor partners. The benefit to us there is we control everything with the whole process. We don't do, and most mortgage direct lenders or mortgage bankers, they don't do checking. They don't do car loans. They don't do savings accounts or CDs. All they do is mortgages. So they are a little bit more efficient. But the difference for us is that I may have access to 12 different banks, all of them offering different interest rates. So while I have borrower approved today, the investor we finally select a month from now might be different, because I still have the option, the benefit of choice. If I have the borrower pre-approved, I have several investors to still slot or target that loan to. Not only today when we're looking at rates today, but in the future we can change to see whoever's lowest. We can take advantage of multiple lenders. Well, the last one will be a mortgage broker. Sorry, the difference with a mortgage broker is they also, like us, have a vast selection of investors to choose from. So if we have a client that just doesn't fit at a retail bank, maybe the credit score is not good enough, or they don't have the full 20% down payment, there are other lenders that we have access to, and brokers have access to a lot of lenders. The drawback or the biggest challenge there is that they lose a little bit of control, because on the direct lending side of things, I know who my underwriters are. I know who my team is. On the broker side, if I submit 5 different broker loans to 5 different investors, each one of those processes that I have to follow are different. The disclosure process, how to order an appraisal, what they need. So there's just more opportunity for disconnect. And on a purchase, we're trying to limit that as much as possible. So brokers definitely have their place. All lenders have their place. It's just making sure that the customers are well informed and that they're doing their due diligence, not only to hire somebody that they feel comfortable with, but just, is giving them the right information for what they need.
Perfect. And I know we're going to talk about rates and how that works and points and things in a future video, because I know a lot of buyers don't understand that as well. And as rates go up and points are becoming something that is almost required, then there's some understanding there too, right? What are some of the misconceptions that you see borrowers have between the different lenders, or just in general with lending?
The number one misconception would be like, well, if, because I bank here, I'm just going to go here, right? Oftentimes certain credit unions, specialize in taking care of their members, but they don't specialize in home loans. Right. Some banks, that while they are nationwide banks, they have certain limitations nationwide that maybe don't help in the local market where we're at. So sometimes people will think just because I bank here, they're going to give me a better deal because I have a checking account with them. And that's really not the case. In fact, the government almost views preferential treatment as discrimination. So
interesting.
Yeah, it's one of those things. So, it's not always that just because you have a checking account at this place, if you walk in there, that they're going to be the best option for you. Another one would be, and this is what a word of caution is, I'll just go online and get a loan, because there's so many moving pieces to it. If you don't have somebody that's accountable to you, that's working in another state, it's difficult to communicate and get and to have a pleasant transaction, right? Something that closes on time without stress, and realizing that if things don't happen in order, there are consequences. So we want to make sure we're protecting clients.
Yeah, for sure. And I've definitely seen that, because our local San Jose area market moves at a different pace. So some lenders just don't understand that, or the loan size is so significant, they aren't necessarily comfortable with that either. So definitely be cautious using online banks, especially for a purchase when there's timelines involved.
And especially with the online forms, a lot of companies that are out there, if you put in a submission form, they're not vested in actually doing the loan. They'll just sell that person's information to 7 or 8 different lenders, right? So then one person, like one online inquiry through some of these companies that are online, will just result in 8 or 10 different phone calls at all hours of the day. So that's one of the number one complaints about some of the online inquiries, is just that my data got sold.
So how can you help new buyers understand how to find the right program, the right lender for themselves? How do you recommend they interview people, or what process? How should they do that?
Yeah, I will always say, of course, we love competing for business. Every professional out there does. But, for the customer, they need to do a little bit of homework, and they need to make sure that they're hiring somebody, and that they're going to stick to guide them through this process. Waiting until after you get an offer accepted and then starting to shop is just that's a recipe for disaster, right?
Yeah,
because
doesn't work.
Yeah, and normally it's just not the way that it should be done. So making
do
sure
that
that
first, right? So what we're
yeah.
saying is shop for your lenders before you find the house. So really do your due diligence ahead of time. I always coach my clients to do that because once you're in contract, you want to focus on the house and the process of moving, and that relationship between the lender and your agent and your timelines and your contract are already set. So it's really hard to get somebody else to fit that mold. So do it first.
Right. So I'll always say that a competitive interest rate with a service-minded professional is always going to beat out the lowest promise of a lowest interest rate that you're going to find somewhere by somebody that's inexperienced, because the problem is you won't know they're inexperienced until it's too late. So I would encourage everybody to look up the loan officer, do a Google review. If you can't find them, not that that's a red flag, but I would be concerned if they're doing the volume that they need to do, if they're helping as many families as they need to, that they should be visible. There is a database, which I'll include a link below, that you can look up and see how many years they've been in the business. Because it's funny that a lot of times in these with people looking for mortgages, they'll talk to the first person, they'll like him because he's a nice guy or gal, and then they don't go past that, and then they don't realize that there maybe was a better choice. But also looking at responsive times, are they responding to your emails? Do they pick up the phone and call you? Like those are all the things that go along with building a team to help you through your home purchase.
Perfect. So how would you recommend borrowers shop for a lender? Do you think they should pull paperwork and give everyone all of their documents up front, or what would be the process to go through?
That's funny that you ask, because I do have something. What I would refrain from for all borrowers is refrain from sending in your documents, your tax returns, your pay stubs. What I do have is I can include a copy of it here, is our pre-approval profile. Right? Because skilled loan officers are trained to pull the credit reports, get the application in, because that's how loan officers are trained. And you don't want to be overcommitted before you're ready. But, loan officers are going to say, well, I need all your data before I can give you a competitive quote. So even at a high level, what's the scenario? Without pulling your tax returns, I have a pre-approval profile where you can plug in your income, plug in your debts, plug in your assets. And on one sheet, without having to send all of your confidential data over to a lender, you can give them this one page, and they should be able to give you and respond to you with the competitive quote, not only for interest rates and programs, but also with closing costs, because we have to understand the cost of getting a loan have increased this year as well. So you want to make sure we're understanding cash to close. So it's completely fair for a borrower to get this type of information without having to submit all of your confidential data first.
Perfect. Yeah. So then you use that process to select the right lender to move forward with, the right professional, after you've done your diligence, right?
Correct. Right.
And then you go to that process of pulling credit, submitting actual documents, et cetera.
Correct. Because at that point, you'll already have some communication. You'll figure out if they're responsive to you. Do you communicate well? Are they able to explain everything properly? Are they rushing too quickly? Do they have their assistants calling you back? How do you feel about it? Right. So a lot of big producers, a lot of active loan officers have teams, and that's okay. You just want to know who the players are and making sure that ultimately that it's a concert, that it's a fluid motion, instead of feeling like you're being passed off from one hand to the next. So of course, we're looking at interest rates and fees. That's obviously very important, but also the working relationship with being able to ultimately get what you want is equally important.
Yes, especially as a first-time home buyer, I think the stress of the loan is what really can add or make that experience not enjoyable. And buying your first home is really exciting. Right. So doing that research and diligence up front, building a relationship with your lender up front,
right,
and then home shopping and going through the process is the right way to do it.
Right. And also understanding, one important question for buyers to loan officers: who's available after hours or on weekends?
Yes, right? Because that's when you're home shopping.
That's when you're home shopping. Benefit for us is our clients have jobs, so we know that after hours and weekends is typical. That's par for the course. So if you have a loan officer that turns his phone off at 5 and turns it back on Monday morning, is not available to get you that pre-approval letter or to answer that question, that's just not going to serve you. So those are questions that buyers, home buyers should be asking about their lender partner.
Perfect. So to close up, Mike, how do you recommend that people contact you if they want to, understand the loan options you have or work through the pre-approval process with your team?
Yeah, it all starts off with a phone call. We have a no cost, no obligation, consultation, high level. We can deep dive as far as we like to. So I'll have my information below, on the link here, so we can schedule a call at your convenience. Again, evenings and weekends are typical, so we can do it. It doesn't have to be the normal 9 to 5. But scheduling an initial call would be best. On that call, we can review budget details. We can go through a quick payment profile that I have, where we can really at a high level plug in income, debts, and start refining what their borrowing capability is. So at least on the end of the call, they'll know kind of what their sweet spot may be for borrowing.
Perfect. And then I also have another video I recommend you watch next, which talks about the difference between pre-qualification and pre-approval. And there's a third that I get into a little bit, is like an underwritten approval. All of those three variables are really important to understand. And the California purchase contract has been updated so that your agent actually has to check so that sellers and the listing agent really know how far you've gone into the lending process. So it's really important to understand the difference.
Right. Absolutely.
All right. Well, thank you, Mike, for joining me again on another awesome video.
Yeah. Happy to be here. And look forward to the next one.
All right. Take care.